Sector, we're going to look at the refiners, an area that is typically underappreciated and underdiscussed, especially in relation to your E&P companies, right? Exploration and production companies, and a lot of them are very large, but also the biggest ones are vertically integrated, where they have refining businesses within their E&P business, and so that can oftentimes ebb and flow. And that also means that the pure refiners, right, the Valeros of the world, their business often ebbs and flows pretty dramatically depending on crack spread and other factors. So we're going to unpack that industry a bit and where the current environment stands, especially post-pandemic. So that's one thing we're going to discuss. Second is bonds and how your typical allocation of bonds, based on rules of thumb, are opening investors up to different risks than you've seen in the past, right? Mainly duration risk, and what are the pros and cons of utilizing bond funds and different strategies in order to gain a little extra yield in an environment where there's not a lot of yield. Also, stimulus checks. What are people doing with those stimulus checks, right? We have had 2 rounds, both with the CARES Act and the one at the end of last year, where a lot of people got $600, and there looks to be another stimulus check coming at about $1,400 or so to American households. And the big question is, how are citizens spending the money, or in some cases not spending the money? So we're going to unpack those details. And then lastly, if we have time, looking at historical stock bond returns and what to expect going forward based on current valuations. Now, that's what's on my mind, but ultimately I want to know what's on your mind. And as you probably noticed, I'd like to fit in as many caller questions as possible, so let's grab one right now at 888-99-chart.
Hi, Steve. This is Steve from Brisbane, California. I have a question about stock ticker price ABM. The ask on it is 42.10, and the bid is 31.81. Why is there such a large spread? Thank you.
ABM Industry. I've not heard of this one. And let me take a look at the volume. Oftentimes when the spread is very wide, that's because the volume is very light. Okay, so let's take a look at that. You have 50-day average volume, $349 and 300 shares. I'm interested. I don't see that. I'm not seeing what you're looking at. You might be looking after hours. After hours, oftentimes, there's widespread. I'm definitely not seeing that. I'm seeing pennies between trades, right? I'm going to a 1-minute chart. And so what you're seeing on that spread, that's not accurate. It's a pretty tight spread, especially during trading hours. Now, after trading hours, if you're looking at bid and asks, often they're very, very wide, right? Because the action in after hours is super light. Cost of trading after hours, etc. So I just wouldn't worry about it. I'd be looking at it during trading hours, and you're not going to see that spread, especially with that volume, 349,000 shares traded on average for the past 50 days per day on a $41 stock. That spread is not accurate. Hope that helps. 8899 chart, 88992427 is how you get through and ask your question on today's show. Now let's dig in quickly to the refining business. And oil refiners are predicting a strong recovery in demand for fuel in the second half of this year. More people are expected to go back to work, take vacations, etc. But what's interesting is that these companies are skimping out on routine maintenance. Typically, it's the time where refineries shut down, they clean out systems, they replace machinery in order to get ready for the peak summer season when they're going to have to really pump out high volumes because of summer driving demand. Now, clearly, this has been the last year where capacity utilization has dropped. It's dropped about 10 points from normal capacity to about 82% currently, according to U.S. government data. Typically, this time last year, it was running at 92%. And the business has been tough. Refiners are losing money on output because crude oil prices are rising faster than the demand for fuel. So their crack spread has tightened or become negative in some cases. Before the break, I was unpacking what's happening in the refining business, and overall, the demand level for gasoline and jet fuel remains lower than this time a year ago, not surprising, before the outbreak, and it remains about the same as it was in the summer. And we had a lift going into year-end, and then we had acceleration of COVID cases, more shutdowns, and we kind of retrenched back to those summer levels. And so absolute demand for gasoline has retrenched a bit. We're still within the 5-year range of gasoline inventory, so that's the positive, but demand-adjusted inventory remains well above historical ranges. So this is something that needs to get back into balance.
Many thanks, as I'm humbled already by everyone's support. Appreciate you.
I'm just chilling.
4 free shares of stock when you open an account and make your first deposit.
Totally free. You get a stock like Microsoft, Visa, Johnson & Johnson. All you gotta do is sign up for my link down in the description. Sign up for Robinhood. All you gotta do is fill out some information about yourself and link your bank account. And literally, that's it. That's all you
stock investing. M1 Finance is offering a special limited time promotion. If you sign up with my M1 Finance referral link, which is also in the video description, and make a $100 deposit, both you and I will receive $30.
Line up that like button, or smash the like button. Regardless of which metaphor you prefer, this small action really helps me grow the channel, and I appreciate it.